All right, this continues to be Nvidia's world, and we're all just living in it right now. The market was down a little bit today, nothing too major. As long as you had Nvidia inside of your index. If you didn't have Nvidia inside of your index, then things didn't look so good for you. And so I'm going to break down the differences. I was pretty active on Twitter today, so if you're following me on Twitter, you saw some pretty interesting things that's going on in terms of how strong how concentrated this market is, how strong the Qs have been relative to its small cap peers. We spent our whole technical analysis class looking at the relative performance of NVIDIA, how strong it is. That was for our premium subscribers today. I compared it to another time in the past to see what it means, and so I'm going to kind of give you a little hint as to what I'm looking at there with today's market outlook video as to what we expect to see here. Are we headed towards another intermediate decline, which is, again, it's very typical to get one in the first quarter and another in the second quarter of the year. We just happen to maybe get two and both in the second quarter of this year. So we'll see if that ends up being the case. I'm going to kind of show you some signs that are starting to pop up that pretty much indicate that we may have already started an intermediate decline, at least in one index. And then we'll take a look at the sector moves, what's kind of driving today's performance. Like I said, we'll take a look at NVIDIA's outperformance, and then we'll our trade idea of the day. We'll finish up with our trade idea of the day like we normally do as well. So let's go ahead and get started. Today is Wednesday, May the 29th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Hey, before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. If you're watching us on our blog, check out some of these other things over here on the right, including our Market Outlook live video where I take a look at old Market Outlook trades, close out some, see whether we should stay in others. We close out a few today. We already put on today's trade idea before the market closed during that live session. Come down to the bottom, click this heart. It opens up this tab. Hit that like button there. Same thing here. Click this thumbs up icon. It opens up this tab. Hit that like button. The more you do that, it helps get our content out to all of our followers on those platforms. It's a big deal for us, is why we always ask. So thank you to those who like this day in and day out. Those who don't, you can do right now with one or two really easy clicks. Help us get to our 100 like goal for our Market Outlook tweet. All right, let's go ahead and take a look at the S&P 500 with the market forecast indicator. As you can see, a little bit of a down day today, but still inside of that NVIDIA day range, right? So we still haven't, again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. We've been inside the range of one of those 10 days. So it kind of goes to show this again, the kind of market we've been in here. The intermediate line is falling, but it's still easily in the upper reversal zone, so no threat there to any kind of bearish pullback yet, at least. The momentum line did dip to the extreme level, to the 5th percentile, which, again, we haven't done since back over here, since we were in the intermediate decline. This is the lowest level on the momentum line. And we'll see how that impacts a near-term line, because usually the near-term line dipping into the reversal zone also kind of signals the start of an intermediate trend. Again, that's the short-term indications. Again, nothing's 100%, but that's kind of what you'd start to look for that kind of first breakdown. You start to look for signs of a breakdown, right? Like you saw here, and then eventually over here, and that ultimately led to the intermediate decline. So we're still almost 2% above the moving average. So we're not anywhere of a threat yet for a decline. And market sentiment line still in bullish territory too, and the intermediate line still well above market sentiment. So again, no issues. We're still bullish. We're just not strongly bullish anymore. The momentum is not in our favor. We're in kind of convergence mode right now for the S&P. Near-term decline. I mean, as of right now, this is a near-term decline. That, again, by definition, we could bounce right back up off of this because this is an intermediate confirmation signal. Oversold momentum line with a strong bullish posture with the near-term line in bearish territory but not in the reversal zone. That's about as good as you get. Now, you don't usually want the momentum line. You want it kind of like this. This is the ideal bullish intermediate confirmation signal. You can see we bounced up for a couple of days, and we'll see if we get that this time, despite the fact that it has dropped as low. What we really want to avoid is that near-term line following suit, which it usually does. Doesn't always do that. You can see over here it didn't do that, and we were able to bounce back up, at least for a day, and we'll see if that ends up happening again. That's not the case for the Dow Jones Industrial Average. The Dow Jones Industrial Average produced a bull tag today with the intermediate line falling pretty rapidly and almost out of bullish territory, almost below the market sentiment line, as well as the chart's midpoint, to where we get dark pink shading. So pretty bearish, bullish pattern. We are above market sentiment. Usually when you get the bullish bull tags and you're below market sentiment, then you tend to bounce, right? In this case, we get the bull tag and we're above it, and that's not necessarily the best sign. That generally signals the potential for a bull tag. You can see over here, we were slightly below it at the time when you got that one. But you can see like that, especially with how big we dropped. We're down 1% below. These we were down 0.03% below. Here we were 0.15% below. This one over here we were 0.09% below. We are a full 103 basis points below the 30-day moving average. So again, a suggestion that this might not be one of those bull tags that bounces right back up and continues the bullish trend, again, with how rapidly that intermediate line has really fallen here. And short-term sentiment as bearish, again, those are your indications. Momentum line at extreme lows, near-term line well in the reversal zone. That is, you don't see that when you're in bullish moves. I mean, maybe for a day and then you bounce right back up, but not for multiple days like we've seen. We've had the near-term line now down to in the reversal zone for 4 days, and 3 of those days you're below the 10th percentile. And the momentum line has been multiple times into the lower to extreme lows, and it has been also in the reversal zone for an extended period of time. Again, the short-term indications would suggest that we're about to start a new intermediate decline for the Dow Jones Industrial Average. NASDAQ 100s, that's kind of the best case scenario. Like, you're still pretty strongly bullish here. Again, bullish intermediate confirmation signal. It's not the best one because your near-term line's not down enough to get a good sustained bounce out of this, but by definition, that's a bullish signal, oversold momentum line with a strong bullish posture on the intermediate line. The Russell 2000 has that light pink shading. We came very, very close to getting the bull tag here as well. We closed above the moving average just barely here. The moving average at 20.3358, and we closed at 20.36. And you also have the you don't have the intermediate confirmation signal here because the intermediate posture is declining below the 80th percentile. You don't get intermediate confirmation signals with light pink shading. It's still got to be dark green. And again, your momentum line down to extreme lows, about as extreme as you can get, 0.1. So that would suggest that your near-term line, after kind of producing this false flag, this kind of bearish peak here, will also get down there. So more than likely, we're going to get a bear bull tag. Like we said yesterday with the Dow, we're probably going to get the Russell bull tag tomorrow. And we'll see, again, if we're only down, this case, 48 basis points is no big deal. Or you're only down 25 basis points below the moving average, it's no big deal. You can bounce off of that. So we'll see if and when, how far, if we drop tomorrow, how far below the moving average we are to get an indication of, whether or not it will bounce back up like this one, or turn into a bearish intermediate decline like we eventually got over here when we broke down below it this time. So there's the market forecast charts. Let's take a look at the weekly chart for the S&P. 2 more days left. Again, the candle size is looking weak. It's not bearish because it hasn't crossed below 0, but at least it is below its moving average and falling, so it's weaker. It is, as of right now, a lower close, so that would suggest weakness and the potential for transition into next week. Remember, the Dow Jones Industrial Average has more bearish pattern. It already has turned bearish, right? We got the transition candle last week, the lower close with the upper and lower shadows, and then now the red arrow and the bearish candle and breaking below 0 here. So, we might be a week ahead on the Dow Jones as to what we're seeing right now on the S&P 500. Your Russell 2000 it's kind of similar. You got a couple of transition candles. We got the red arrow on this week so far. So again, you can kind of see some indications of weakness there. 3 green arrow charts. Obviously, you don't have 3 green arrows anymore, except for the Qs. The Dow has 3 red arrows right now, hence the bull tag. You get the bull tag generally on 3 red arrows. That MACD and stochastics are pretty low. Again, another sign that we probably aren't going to bounce here like we have on some of these other bull tags. When you zoom out a little bit so you can see some of the other 3 red arrow signals, you can see your MACD wasn't nearly as strong there when we bounced back up. The same thing over here. If I were to here, let's just go to the actual index. You can see it right there. Not nearly as bearish on the momentum. Over here, not nearly as bearish. Over here, not nearly as bearish in the momentum. That's I mean, this is the most momentum to the downside. Now, this is the this is an actual MACD histogram. It's not the PPO. If you were to look at the 2-line version, so we can see the PPO here, it is also the lowest, the most bearish momentum we've had so far in the past year. You have to go back to, let's see how far back we go, to get a similar momentum to the downside would be at the end of 2022, right? So this is the lowest momentum. The stochastics has dropped pretty quickly as well into the lower to bearish levels. The S&P is not so bad, right? The S&P is still okay. You're still above the, oh, I don't know why I did that. You're still above the 17 day, even if you're dropped a little bit below the 8. So you're in convergence mode. The MACD is negative, and your stochastics now is below its moving average and outside of that reversal zone. So again, not bearish, but now we're not bullish. Right now, the weakness is gone, or there's weakness there. The DMI is also showing that weakness. You're below 25 now on the positive indicator, above 20 on the negative. So not quite bearish yet. But the Dow is bearish, right? You are above 30, easily above 30 on the negative. You are almost below 20 on the positive, so you can see how things are changing in that direction. Looking at the RSI and the CCI chart, again, you're not bullish anymore, but you're not bearish either on these indicators, not yet at least. Your Dow Jones Industrial Average, you are. So you drop below 40 on the RSI. You're well below minus 150 on the CCI. And if you look at the weekly CCI, we barely recovered, right? We didn't recover very much, and we're already back down below 0. Again, breaking below minus 100 is kind of a sign that we're in intermediate decline on that particular weekly indicator. Looking at the Ichimoku cloud, still above the cloud, though below the green line, which is not that big of a deal unless you're in a mature trend. In this case, we're not mature, so breaking the blue line is more significant, which we have already done on the Dow Jones. So well below the blue line. The trend is gone, so we've hit 0 on both trend quality and the trend noise balance, and we're close to breaking the cloud. We're still at the bottom of the cloud, so we're still, we haven't really passed the point of no return into intermediate decline. You have a positive rate of change as well. So if we can bounce back up above this blue line and potentially the green line by the end of the week, in the next 2 days, that would go a long way to kind of avoiding what appears to be inevitable for the Dow Jones Industrial Average. And then finally, looking at the Bollinger Bands, you're still in the upper half of the Bollinger Bandwidth that's declining on the S&P. Again, just a sign that we're not bullish anymore. Doesn't mean we're bearish. Momentum is declining as well from pretty high levels, mind you. And the band's way outside the Keltner channels. But again, looking at the diamonds, we are in the lowest quartile of the bandwidth. We're not, we haven't broken below the lower band, but we're in the lowest quartile of its declining bandwidth. This momentum is sharply dropping, and we closed below the lower Keltner channel today. So again, like I said, it appears inevitable that at least the Dow is in intermediate decline, the earliest stages right now of intermediate decline. If we take a look at the intraday range, you can see the narrowness. I mean, we had a narrow window going into today. There's the gap between yesterday's low and last week's low. That's a pretty tight gap that we spent the whole day in. So now breaking last week's low, and now things get a little bit more dicey, and we haven't done that yet. And the range, once again by the middle of next week, it's really going to tighten up unless we get new highs. Again, for the Dow Jones Industrial Average, you can see still no bearish pattern there. The Dow Jones, we are set up for a bearish cross, right? We're below, we've already hit 0. We're below 70 on the positive. We are in the lower half of the chart now of the 4-week range. You can see the close not only below yesterday's low, but also, which happened to be below last week's low already. We closed below both, filling in this gap from May 3rd, starting to fill in that gap down there. And if you look at it on this basis, the S&P is kind of shown some weakness here, breaking below its moving average and out of the reversal zone. Again, that's not bearish, but it's just some weakness from a bullish standpoint. Your Dow has plummeted down to bearish territory, well below its moving average. And like I said, below that 30-day moving average up there as well. The trading ranges are still relatively low, picking up a little bit. The volume is still extremely low. Let's look at the Dows, and you can see the volume is still dropping. The average volumes are dropping, not to new 52-week lows like on the S&P, but look at the range starting to pick up. So the range is moving its way back up towards this 1% level, which again is a sign of intermediate decline, right, when we get back above the 1% mark. Finally, looking at volatility, the VIX is obviously up today, up about 10%, up to 14, so above 14. Hasn't crossed that 15 level yet. We have crossed the 90% level, haven't crossed 95, so, you know, again, looking more bearish, and we're still relatively low. Remember, 80 is extremely low, so we're actually a lot closer to the extremes on the downside than we are up to the upside. So, you know, again, we're not too worried here yet with extremes. There's your 80 level on the VVIX, and then there's the 100. It happens to be, it looks like 103. This would be, yeah, right there at 80, and this is up here. Probably should be closer to 100. I think that's the intent, was to be at 100. Let's just put it there. Because getting above 100 now, that's a sign of intermediate decline there. And you can see getting below 80, getting below 75 was extreme to the downside, way extreme to the downside there. And we are, that's where we were, and that's why we were set up for an increase in volatility that we've been talking about. And you can see volatility here has jumped up above, this easily above the 17-day moving average. And you can see momentum for volatility is definitely steering to the upside. Now, you know, again, we'll see. One day jump like this, we typically start to bring some of that back, right? When you typically, if you look at the daily price moves for the VIX, and you see, you know, a 10% move like this, it's not too common to get multiple 10% moves. And you can see one right where my cursor was there, an example of one right over here in April 12th, and then the 15th. That ended up being kind of a peak for volatility, and then we dropped from there. But most, you can see, like this 10% drop, we didn't increase, we got to drop the next day. Here we got to drop the next 3 days, and you can see here we got to drop 2 out of the next 3 days. Here we got a big drop, and so you can see when you get these big jumps, we typically at least get a small drop, and we'll see if that ends up being the case here for the VIX going into, like I said, the end of this week. All right, now let's take a look at what's driving this price action here. So let's go out here real quickly to the asset class comparison chart. And let's look at today. Today was an interesting day in the bond market. A couple pretty negative bond auctions pushed bonds down, TLT down 1%. Today, but you can see that also had an impact on small cap stocks, down 1.5%. Emerging markets, developed markets, all down quite a bit. The dollar was up strong, one of your bigger moves in the dollar that we've seen in a while, that actually pushed commodities down. So we had the two heads of the three-headed monster again that have been kind of joined at the hip the whole time, the dollar and bonds. It was only commodities that decoupled from that, and you can see a big time move in the dollar there, rebounding yesterday's small decline and then some, right, and getting back up above the 17-day. Again, a move higher in the dollar and a move lower in bonds, so higher in bond yields, is not a good recipe. And you can see we're already below the 200-day average in TLT. We're breaking back below the 30-day. looking to make a new leg lower as the MACD is now slightly negative, and stochastics is crossing into bearish territory. So again, that's been the recipe. That's been the recipe. Weak bonds, strong dollar has been the recipe for weakness. Now, crude oil has been kind of the next part of that, and it was down a little bit today because of the strength in the dollar, but not down enough to really weaken. Because if we can really break down here into like the low 70s, then this inflation expectation story can start to really reduce and drop and go down to the downside. The other thing that really stood out today is the breadth. The breadth was absolutely horrible, down minus 65, almost minus 66. The summation index is probably a day or two away, depending upon what we do tomorrow. Could be crossing below 500 again, which again typically signals intermediate decline when you've been above it to fall back below it. So, and we weren't above it for very long. So the breadth, the money flow has been relatively weak. You can see the money flow here still in bullish territories, bullish levels above 60. But again, we're well off the peak in money flow, even though we're still above the price level. And so you can see like that's not very good either. And when you look at the number of stocks above their 50-day moving average, that dropped below an important level. It dropped below the 40% level, the 200 stocks. So we got down to minus 187. In fact, when you look at some of these other indicators, like the number of stocks above their 50-day or below their 50-day by 5% or more, getting above 20%, or the mean, whatever the mean's at, is the kind of the key level for intermediate decline. Well, here we are again. In fact, we're almost at 30%. We're almost at the higher levels since we were last summer, when we really hit that second and third leg lower, and we got all the way up over 50% of the S&P was below the 50-day moving average by 5% or more. So pretty significant decline. Now this is the numbers. This is the average deviation away from the 50. So when you include all 500 stocks, we're only down about 2%, and that, again, it's below the mean. The mean is positive, so usually the average deviation is right around 0.7% above. We're below, and you can see getting to a negative 2% level typically also coincides with intermediate decline. So from a breadth level, things are not looking very good at all. We saw yesterday the skew had jumped up. It's still above 150 today, so 2 big days in a row. And you can see the momentum for the skew jumping to really high. Like we haven't had this high momentum and this high skew since right before the last kind of 10% decline. Ultimately, is what we had there during that run. The ratio chart of the Qs relative to IWM jumped up to its highest level ever, up here to 2.26%. That's a very, very strong level. The RSI is at parabolic, strong levels. The CCI is at strong levels. The RSI is at strong levels. So we're really we're really skewing. In fact, we're really skewing towards one particular stock. When you look at here, I tweeted out. Let me pull up my Twitter. Then I don't have to recreate the charts again. When you look at the number, like the stocks, XLK is really the only sector that is just outperforming. Everything else is losing momentum and relative strength to SPY. XLC is doing okay, but not really moving in the past week. And XLU still has relative strength, even if it's losing a lot of it. And it's definitely losing momentum over the last, besides real estate, utilities and real estate, both interest rate sensitive sectors, losing quite a bit of momentum here. But when you look at inside XLK, here's the top 10 holdings, and you can see there's really only one, NVIDIA. Like NVIDIA really over the last 5 trading sessions has really taken off into the leading category. Big time, big momentum move. Qualcomm is still doing okay from a relative strength standpoint and momentum. AMD as well. So those are your 3 high flyers right now from a momentum standpoint in the leading category. Everything else is not looking so good. Microsoft is kind of like XLC. Apple is kind of like XLU. And then we've got everything else down to the left. Qualcomm is kind of moving down too. So it's NVIDIA's world. And we're all just kind of living in it. And And NVIDIA, you can see like, you know, we're very far up above. In fact, when you look at NVIDIA here relative to the S&P 500, you can see how far up above, how strong the momentum is, how strong the MACD has gotten here. The RSI is above 80. The CCI got up to above 300. I mean, this is a very, very strong relative performance, very similar to what we saw at the end of 2021. Very similar to what we saw at the end of 2021. And when you look at that MACD in terms of how far above the 50-day average this ratio chart is, you can see it's about as high now as what we were back in the end of 2021. When NVIDIA and the Qs relative to IWM, when everything was peaking, and that ultimately led into, and we were very strong. Everything was very strong here. RSI, everything, all the oscillators. And then we ultimately went into the end of the year decline following Thanksgiving, and then 2022 was not so good for NVIDIA. So we'll see if we end up in a very similar situation here because of how strong, how parabolic the move has been. So it's not just the fact that we have that NVIDIA is moving higher, but it's absolutely killing the market right now. In every other instance where we've jumped up this far, this fast, on a relative basis, it ends up coinciding with, it doesn't necessarily mean we drop, but it coincides with a peak where we just end up at best going sideways, up and down, but sideways for a while. And that's again with the PPO on a long-term basis, this gap between the long-term moving averages as strong as they are. If we take a look here at the sector moves, the sector rotation, let's pull up the sector chart. Again, over that same 5 day, let's look at that same 5 day window that we just saw. So 1, 2, 3, 4, 5. Here's XLK and XLC just killing everybody. And then you can see real estate, industrials, healthcare, financials. So, I mean, they're all down 2+%. Utilities is down, a recent high flyer. Also, with the AI trade, down 2% over this 5 day window. The S&P is holding strong because of what we're seeing in XLK and XLC. If you just look here today, you can see those three sectors outperforming XLK, XLY, XLC, interestingly enough, along with XLP, outperforming, and you have your other cyclical area that are interest rate sensitive, dollar sensitive areas that both underperform. When those two things start to rise, the dollar and interest rates, they're underperforming again, which could lead to broader weakness in the markets because that's been the trend over the past few years. All right, now let's take a look at our trade idea of the day, and we'll take a look at Chewy. Chewy had its earnings announcement, really broke out big time. One of your stronger movers today, up 27%, breaking well above the 200-day moving average here. You can see breaking out of the value area, away from the point of control. Not a lot of volume because we dropped so precipitously here. There's not a lot of, resistance areas, like different levels of resistance, because we didn't start, stop. We just kind of dropped from when we dropped it below the 50. We fell all the way down for a good period of time, all the way for a couple of months down to about where the point of control is. Again, one of your bigger days, you can see, in fact, I think it might actually be the biggest day. Let's go back. It doesn't have a long history. But yeah, it is the biggest day that the stock has ever had. Not the biggest gap it's ever had, but the biggest finish that it's ever had. And, that's kind of a theme here, this idea of extremes. You can see how the momentum extreme, the volume extreme, the move higher up to the upside. If you look at, let's see here, the market forecast chart for Chewy, it looks bullish, right? We're 32% above the 30-day moving average, which obviously is the highest in the past year. Not in the highest in the past 5 years in its history, but pretty close. And some of these other levels kind of ended up being some peaks in the market. So obviously you're going to get some extreme levels here on some of these other oscillators, like the DMI, very extreme, almost 50 on the positive indicator. Not quite below 20 yet. The ADX was so low when we got that move. The RSI jumping up to extremes from not so, from pretty neutral levels. We went from neutral to extreme in one fell swoop. You look at the Ichimoku cloud. Again, we were below the cloud actually, but the cloud wasn't very big, and then boom, we went from nothing to way up above the cloud, way up above both the blue and green lines, the midpoint of those particular ranges. And then of course you're going to have an extreme here. In fact, that's the most it's ever closed outside of its Bollinger Band width ever. So big jump higher there, big jump above the Keltner channels. You know, again, when you get these big extreme moves, it's hard for the markets to maintain that volatility. So what I decided to do is, that's okay, let's see if it does. So I sold the bear call spread at the money, but you notice what I did here is it's still just a pending order, because typically for a $2.5 wide spread, we go for about a 60-cent spread. So I set the stop limit order to fill us in if it gets, you know, at that 60-cent mark. So you can see on the chart, the stock would have to drop all the way down here to get filled in, and then you can see where my break even is on the chart here. I posted that break even. We'd have to now, if it were to drop that much, break back up to the upside and continue the bullish trend, get above today's high and keep going. So if it keeps going without the pullback, we never get into the trade. If it pulls back, then we get in, and then now it's a matter of whether it's going to be able to get going again. You know, and again, this is an extreme, so it's got to get back to extreme levels, and usually it takes quite a bit of consolidation, even if it's just sideways, quite a bit of consolidation to generate enough energy to get back up above that extreme high and get going at a normal pace. So that's kind of the idea behind today's trade idea. Kind of the same theme behind like the Nvidia theme, right? That we're so bullish and so extreme, you know, can we maintain that energy, or are we gonna, is it gonna lead to intermediate decline? In the case of the broader market, like on the Dow Industrial Average, which has no exposure to Nvidia, in the case of this stock, whether or not, even if it just goes sideways, that would be enough for us to make money on this particular trade. All right, well, that does it for today. You've heard from me now, and I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video. Join us at MarketScholars.com for free. Follow and like me on Twitter and Facebook as well. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.